Today is 19th of August and the time now is 6:30 p.m. As I talk to you, US futures are down. Dow futures is down by around 300 point or 1%. European markets are deep in the red. SGX Nifty is way below 16,500. It is trading at around 16,300. So what is the reason? Everything was fine. Suddenly this thing is happening. What is the reason? The main reason is taper tantrum, fear of taper tantrum. So what is taper tantrum? You will see in this video. Make sure to watch this video till the end. This is a very important concept. I will explain you why this is happening in the market, and whenever US Federal Reserve is increasing or decreasing the rate, or whenever it comes out with a meeting, this thing is happening. Market is trying to crash, and let me tell you, this is just a knee-jerk reaction. What is going to happen, you think? Nothing much. This is just a knee-jerk reaction, and we are going to rebound, or we are going to get back to normal. I will tell you how and what I think in this video. My name is Umar and welcome to yet another video in There are many ways Federal Reserve Bank and central banks worldwide use to manipulate or increase or decrease the interest rate. The first tool used by the Fed as well as the central banks around the world is the manipulation of short-term interest rate. Put simply, this practice involves raising or lowering rate to slow the economic activity and control inflation. The mechanics are relatively simple. By lowering the interest rate, it becomes cheaper to borrow money and less lucrative to save, encouraging individuals and companies to spend. So as interest rates are lowered, savings decline, more money is borrowed and more money is spent. Moreover, as borrowing increases, the total supply of money in the economy increases. So the end result of lowering interest rate is fewer savings, more money supply, more spending and higher overall economic activity, right? On the other hand, lowering the interest rate also tend to increase the inflation. This is a negative side effect because the total supply of good and service is essentially limited in the short term, and with more dollars chasing the limited set of products, prices go up. If inflation gets too high, then all sorts of unpleasant things happen to the economy. Therefore, the trick with interest rate manipulation is not to overdo it and accidentally create a twist inflation. The other major tool available to the Federal Reserve is open market operation, which involves the Fed buying or selling treasury bonds in the open market. This practice is akin to directly manipulating interest rate. In that open market operation can increase or decrease the total supply of money and also affect interest rate. Again, the logic of this process is rather simple. If the Fed buys bond in the open market, it increases the money supply in the economy by swapping out bonds in the exchange of cash to the general public. Conversely, if the Fed sells bond, it decreases the money supply by removing cash from the economy in exchange of bond. Therefore, open market operation has a direct effect on money supply. Open market operation also affects interest rate because if the Fed buys bond, prices are pushed higher, bond prices are pushed higher and interest rate decreases. If Fed sells bond, it pushes price down and interest rate increases. Now, here is the real thing. Now, yesterday what happened is Federal Reserve held a meeting. What it told is, it is going to taper the bond purchase in the market. So taper, what is the meaning of taper? Means it is going to eventually literally slow down the buying of bonds. So when it starts buying of bond, what is going to happen? There is going to be a demand of money in the market. There is going to be a demand of cash flow in the market, and interest rate will eventually increase. If the interest rate is going to increase, economic activity is also going to decrease. So that is the main reason people are exiting the market, and dollar is going inching up on the upside. If you go and check the dollar now, it is going to increase on the upside. So people are taking the money from the market and putting it somewhere else. Now in the starting of this video I told this, there is nothing much going to happen, right? This is going to be a just knee jerk reaction. Why? I'll tell you. First thing is, if you see in 2013 same type of thing happened, where due to 2008 economic crisis there were bond purchased by US Federal Reserve. Federal Reserve was buying more and more bonds in the open market operation, and suddenly one day they told they are going to stop this one, and market eventually fell down, right? So Federal Reserve and market participant already have this issue. They have already faced this issue. They don't want the market to crash again, so they will not do the same mistake as they did in 2013. The second thing is Delta variant. Delta variant is much more aggressive than what they have thought or what we are thinking. People are not talking about Delta variant much, but Delta variant is something very serious, I think, and Federal Reserve and other governments all over the world it is not underestimating this Delta variant. It is something of a very serious thing. This virus is very intensive and very aggressive than the normal coronavirus, right? So that Delta variant will not allow the Federal Reserve to stop buying of bond or tapering of the bond, and so stopping the supply of money in the market. So the concept is very simple. When the Federal Reserve stops buying bond, there is going to be less cash flow in the market, and the interest rate is going to be higher, and economic activity is going to be decreasing. So this is a scenario what is happening in the US market, and as we told yesterday, US Federal Reserve held a meeting and they came out with a press that they are going to taper the purchase of bond in the open market operation. So that is the reason Dow future is down by around 1%, and eventually world markets are down. So I think we are going to get back to normal, nothing to worry. This is just a knee-jerk reaction, and I hope you enjoyed this video. Thank you for watching. Take care. Bye.